Media giant Fox out with fourth quarter results a short time ago. Earnings beat estimates, revenue in line. The company raised its dividend and authorized $7 billion in share buybacks. We're also paying close attention to Paramount Global after that company beat analyst expectations in its latest quarter, agreed to sell book publisher Simon & Schuster to KKR for $1.6 billion. Joining us now on this and more, Rich Greenfield, co-founder of LightShed Partners. Rich, we've got a lot to get through. Do either of these results impute onto Disney, which we are expecting a little bit later?
Look, I think in some way they do, right, Melissa? I mean, if you think about what you heard from Paramount, they're selling one of their most solid, stable assets. They're selling Simon & Schuster. It's not a growth business, but it's a solid, stable growth business. And they're doing it to delever because the balance sheet at Paramount was under pressure. And I think if you've seen a lot of media companies, Warner Brothers Discovery, David Zaslav sort of has led the charge on deleveraging. Now you've got Paramount selling assets to delever. If you look at what Bob Iger tomorrow sort of faces is, he came on CNBC that, what I think of one of the most amazing or interesting interviews with David Faber a few weeks ago now. There's a lot of strategic challenges facing Bob Iger. What is he doing with ABC and FX? Who's buying who wants to own those assets right now? Who's investing in ESPN to help him take it direct to consumer? When is he buying Hulu from your parent company, Comcast? Like, there are so many big strategic issues facing Disney right now, not to mention the fact that all of their content just hasn't been working. Week after week, you're seeing movies fail. And so there's a lot of strategic challenges. And I wouldn't be surprised to see one of Iger's focuses tomorrow on the call to be sort of helping investors understand the time frame of how he's thinking about getting the company to be smaller and more focused around their core competencies.
Hey, Rich, so are you suggesting that would you prefer to own Disney or would you prefer to own Paramount, for example?
I mean, look, this whole sector right now is pretty challenged, and I think that's what you're sort of facing. I mean, look, I think investors right now, I think there's been some excitement over asset sales. And so, I think with Paramount, and even with Warner Brothers Discovery, you saw great free cash flow numbers out of David Zaslav and team last week at Warner Brothers. That helped get the stock up over the few days after earnings. I think you're seeing yesterday with Paramount Global, people are sort of playing the deleveraging theme right now more than they like the core fundamentals of the sector. Even with Comcast, I think there's increasing hope that maybe there's a transaction in the future and what will happen. I mean, consolidation is clearly necessary. You're seeing the TV ad market. Every single company, Andrew, 2-3 quarters ago, everyone said, "Oh, it's weak right now. The recession will pass, or recession fears will pass, and it will get better in the second half." Well, we didn't have a recession, and TV advertising is still terrible. I mean, the only sort of notable outlier in TV advertising is Fox, which is definitely doing better than the peer group. But TV advertising overall has been pretty terrible. And so you add in cord cutting plus weak TV advertising, and every single company is facing a secular decline in their linear TV business, and streaming still losing billions. And so I think the end result of that is everyone is now thinking consolidation is going to happen over the next, call it 12 to 24 months. And so everyone's starting to think about what are the pieces you would want to own, not because you love these businesses fundamentally, but because consolidation is possible. And clearly you heard sort of that same drumbeat from Iger in that Faber interview.
Hey, Rich, we also are hearing reports that Max Discovery, this is Warner Media's Max, thinking about a second sports tier that might exist on top of Max. What is your sense of the possibility of that and the possibility that other streamers might try to do similar types of things?
Well, they have the right to do it. I mean, if you look at the Warner Brothers Discovery deals with the leagues right now, they have the ability to have an extra tier. And look, you've seen, Peacock has, put sports rights that are on linear TV, like the NFL airs on both. I mean, you've seen that from multiple companies. CBS does the same thing with Paramount Plus. So
but I think we're talking about a premium tier. I think we're talking about a premium
We are,
tier.
which no one, people have done it for free. No one, or, included in the base, no one's done an actual premium tier. Look, I think it's a relatively small business. I don't think there's going to be a lot of people who say, I want national NBA games on top of my Max subscription that I'm already paying $15 a month for. I think that's just a small business. does it begin to get, Warner Brothers Discovery some knowledge of what sports people will pay incrementally for? It's probably a good learning exercise, but I wouldn't expect it to be a big business. But I think the interesting thing for your viewers is, from what we understand, they have the rights to do it today. So they could have done this for years. They just never wanted to, but they've had this ability for years to offer this product, Andrew.
So the entire industry is deleveraging, Rich. Who is going to be doing the buying if everybody wants to improve their balance sheet? Or a lot of people have debt loads, right? I mean, how are you thinking about the buyers and the sellers?
But Melissa, you're smiling and laughing, and so are we. Like, who is all the buyers? Like, who wants to own ABC and FX? I mean, Bob Iger just told you, we can't fix it. It's facing secular headwinds. Please come buy it from us. That's not exactly the most compelling sales pitch you've ever heard. Now, look, you can look at things like, TPG, a private equity firm, bought DirecTV, and I think they've had a great return on that asset. Obviously, you saw, private equity buying into Simon & Schuster yesterday, but that's not an asset. Simon & Schuster is a book business. It's relatively stable and growing. Buying an asset that's under significant secular headwinds and seeing real declines, not to mention sports costs going up and revenues going down, like, that's a much tougher idea. And I think the challenge is, we don't know who is buying these sort of underperforming or weaker assets. They want to sell them. Who's going to be the buyer? Are these fire sale prices to private equity? I just don't know.